Okay. Warm greetings, everyone, the dear viewers of this channel. I can say good morning based on the time we are having this shooting of this video this very morning, 6 a.m. East African time. I wish everyone a happy day. Thank you so very much for tuning in. As usual, we have our next analysis of our gold market. It's a Thursday, 8th of January 2026. I welcome you all once again to this market outlook or market overview for the day, trading day, Thursday. So thank you so very much. I appreciate you all for the following and sharing and liking of my videos where I come out to touch or have an outlook excuse me, on the market per each and every trading day. So today is Thursday. We are looking at our analysis. As usual, we start our analysis with the monthly time frame, the top-down analysis to be precise, which is acting as our guiding tool and also our sketch, for understanding the historical data of the market, the current data of the market, and maybe the futuristic data of the market. All right, so let's kick off by understanding what is gold doing on the monthly time frame. Now, on the monthly time frame, the gold market is showing a bullish trend as we have been looking at it since Monday this week when we started our analysis. And gold has maintained a bullish trend. Of course, there's a slight pullback, okay, but if I can say, the market opening price of gold in January was 43.25 price of gold, and as we speak now, the highest price of gold in this month so far is 44.96, 44.96, 44.97 there. Okay, yes, that is the high price of gold. If we can take a slight mark, if you can take a slight mark to yes, slightly, this is the high price. Very important to mark high prices, by the way, and low prices, because those are also what we call liquidity zones. Okay, good. So let's also mark the opening price of gold this month. Okay, step by step we mark this. Good. So the lowest point of gold market, if I can expand this candlestick, good. Let's just put the lowest point. Good. So this is our monthly candlestick and we have marked the high point, highest price the market has gone this month, and the lowest price the market has gone. The opening price is different from the lowest price. Market opened here and did a retracement. Okay, opened at a price of 43.26, preferably 25, then dropped a little bit down, took some liquidity, 43.10, then came up. So as we speak now, gold is trading today, Thursday, 8th of January, 2026, gold is trading at 44 price, 44.45 price. That is where the price is. That is the price action. You have to really look at what is the price doing, what is the historical data of the price, the futuristic, and also historically up, historically low. Okay, so without further ado, I think that is something we can look at on the monthly, but we can say that the market has a pullback or a retracement after a long run to nearly the pressure level of 4,500. So that means the 4,500 price level rejected the price. But sellers rejected this and push the price back, maybe to collect more orders, sweep liquidity, hunt more liquidity, take out some stop orders lying in different prices here, maybe to again rally back, depending. But the month is very young, just 8 days, so you never know what will happen. Maybe this will take out this liquidity and then push higher to the psychological prices. All right. So when you're doing top-down analysis as well, after touching the monthly candlestick to look at that data, okay, then you go to the weekly time frame. The weekly time frame, very, very important. Now, the weekly time frame, on the current week, we are having a bullish trend still and a retracement or a pullback, whatever you can call it. Still, the market price moved, rejected at nearly 45, pulled back, trading at 44.40. So that means the market has lost around 600 points from the higher price we have so far. So we can say this is the higher price of the month. Market has gone up to this level. This is the lowest price of the month. Now the candlestick that we are looking at on the weekly time frame is this. So I want us to mark the low point of this candlestick. Right, good. So the lower point of this, the week low price is 43.51. Yeah, and gold is trading within this candle, a pullback, a retracement, and maybe we expect this candle to push back, buyers to push back, and maybe even go extra high to take out the equal highs of the week. Equal highs of the week. These are equal highs of the week. The week, 2 weeks are having a dealing range here. Okay, this is also good zone to mark because price will eventually come to this point, sweep out or grab this liquidity lying here, even push back higher. It might be this week, it might be the next week, it might be the other week, it might be the other week. Okay, so we don't know. The market will tell us. All right, I think that's what we can look at on the weekly. The bias of the week is bullish. That is what we can say. This is a retracement or a pullback which can come back, fill this wiki, the same candle, and then take out this liquidity lying here at 45, 48. That is the previous price, gold price high. All right, so from the weekly time frame, after looking at the data on the weekly time frame, then we go to the daily time frame. Very, very important. Daily time frame. So allow me squeeze a little bit of these candles to let's just use this outlook. All right, now we are on the daily time frame. What is the daily time frame saying? Because every time frame has its data, and there are things you always look at on that data. We have the daily high as we have marked from the week. We also have another daily high here. Okay, we have the daily low here, another daily low here. So we have liquidity on a daily time frame lying. Let's mark this as okay, the lowest point of this day, last week's. That was Tuesday, December. Okay, these are liquidity lying here as well. So what is the key zone we can mark? Okay, what is the bias? The daily bias today, Thursday, is bearish. The market is bearish. Gold opened, very small retracement, and pushed down. So the bias of today is bearish. Just like yesterday when we analyzed the market, we saw a bearish, candle opening for gold, and indeed gold dumped almost up to 44.20, reached around 44.23. That was the lowest price gold pushed from the high points of 44.98 or 7. But remember, yesterday we marked a daily fair value gap. If you can go and watch my video analysis for yesterday, Wednesday, it's on the channel, you realize that we marked this fair value gap, and we can see that the market came and tapped into this fair value gap and retraced. So should we say, okay, this is a fair value gap? It's a high probability fair value gap because the market is indicating a respect. Or fair value gaps are liquidity zones. They are zones of imbalance. So the market came and tapped into this fair value gap and retraced back to 56. And then now we have a new daily candle. But now this daily candle is bullish, is bearish rather. So the play around here is we might have a retracement slightly, then again drop back. Technically, now fundamentally, there are fundamentals today. I'll look at the fundamentals towards the end of the analysis. Also very important, when you do technical analysis, you should also not forget the fundamental analysis, which is the news data, because it also speeds up the market moves. Okay, and also shows the economic outlook of the US economy, primarily because we are dealing with gold and US dollar. So you have to be very, very well informed about the economic data of each and every day from the US economy. So we have the unemployment claims, which is happening today at 4:30 p.m. East African time. Okay, the previous data was 199k people claimed they are unemployed. Okay, so the forecast is 213k people are anticipated to be unemployed. So the actual data will tell us people who are unemployed in the US, are they more than 213K or they are less? So if this data, if the data that will come out, the actual data that will come out, if it will be less than this, then that means the American economy is doing well. Few people are unemployed, so the spending power is high. That can attract investors. So that means the dollar is doing well. If the unemployed people are high or more than this forecast, let's say maybe data comes out and it says unemployed people who claim they are unemployed, they are 230,000 or 220K or 270K, then that is bad news for the American economy. That means investors, they divert their preference of investing in gold. So that's how usually the market responds to the data. But let's go back to the main course here. I'll revisit that towards the end of the analysis, but very, very important. Okay, so today bias of gold is bearish based on the daily candlestick. It's showing a bearish opening, retraced, and then dropped down. So which zone do we have that we are looking at the market either to respect or breakthrough? Is this fair value gap? Okay, where is the imbalance? Where is the market likely to come and sweep liquidity? I have a bias that gold these remaining days of the week, maybe today or tomorrow where we have the other big news, gold might come and push out or balance all these imbalances, sweep all this liquidity, come down here and take out the Monday low liquidity, or even come and take out the Friday low liquidity and then maybe push further, or it might retrace back to move up. It will all depend on different factors, including the fundamental factors that we are having today of the unemployment claims. So we have marked a fair value gap on the daily time frame. We have also marked a bias on the daily time frame, which is bearish bias. Let us go to the 4-hour time frame, which is a very, very powerful time frame in analyzing and also making decisions of the market. All right, so let's look at the daily, the 4-hour rather, and see which data do we have. Let me maintain this size of the candlesticks. Okay, so what do we have? Let me text this. This is the FVG. Okay, D. All right, so we have the daily fair value gap. If you look at what happened yesterday, the market respected this daily fair value gap twice. Gold came, dropped here, retraced. It came, tapped into this fair value gap, retraced. If you watch my video for yesterday, Wednesday, I spoke about, because the market was, yes, Tuesday, the market was at this high. And then Wednesday, yesterday, we said the market was bearish, which is true. Most of the day, gold was dumping yesterday, Wednesday. Now, I think you can see, okay, gold is respecting this fair value gap. We have 1, 2, 3, 4, 5, 6, 7 rejections on 4-hour. This is a very serious indicator. But there's what we call induced liquidity. the market can induce liquidity like this, because this is liquidity. All these are liquidity zones. The market can induce liquidity like this. Then again, does a slight retracement, come take out this liquidity, then dump, sweep this, take out this fair value gap, and then dump back down, and then come and then slash all this. Gold is a double-edged sword. That's the slight interpretation I can. The little experience I've observed gold is not a joking subject. You have so unpredictable metal, but highly volatile, and if it gold can pay you awesomely, or it can take you back to the village without anything you came out with. All right, so what is gold doing? Gold is indicating a bearish trend. Let's first look at the trend aspect. What is the trend of gold? As per Wednesday, it is bearish. That's the truth. Irrespective of these pullbacks or rejections, buyers coming in to push the market back, but respecting this zone, which is a daily fair value gap. We also have a 4-hour fair value gap following this gap. This is market open gap. That's why I'm marking it this. It's a market open gap. Okay. Now, this is the 4-hour. The market is bearish. We expect a pump. So could we say gold might come, tap into this liquidity, sweep it out, then return and drop down? You see? Yes, it can come, pick some liquidity in this fair value gap, help it push back, grab all these orders lying here, retail orders. These are retailers. Every time you see wikis like this, these are retailers. Take out all these top orders of buy or sell side liquidity, buy side, then help it to push down, accompanied by fundamentals, news, unemployment claims, and NFP for tomorrow. You see? Okay. All right. So what have we marked on 4-hour so that we can go on the 15-minute, then we conclude our analysis? We have marked the previous gap. We have a fair value gap here. We have an imbalance here. We have an imbalance here in this daily fair value gap. We have retracements happening on 4-hour, short-term buys on the small time frame. So 4-hour high, 4-hour low liquidity, and also some liquidities here. Very many of them here. Okay. All right. So let us go to the 15-minute time frame. Now on the 15-minute time frame, what are we looking for? Basically, I always like squeezing in this time frame like this. It helps me. Now I'm taking this daily fair value gap as the support zone. Now when you look at this layout, guys, look at this. Gold came, tapped into this fair value gap, had a very powerful bullish move. So which move engineered this fair value gap liquidity? Remember, 15-minute respects a lot higher time frame zones. I can tell you for free. 15-minute respects higher time frame zones. Now, when you mark this as a daily fair value gap, look at it and see how the market behaved or has behaved on this zone. This means this is a very strong support zone. So look at this wiki tap in, okay, at 44, price 44.27, and the market went all the way, pushed to close to 40 to 4500 price, okay, then again dumped. This zone acted as, let me add some, yes, good. I want to mark my support and resistance. I always use fair value gaps as my support and resistance zones. They always bring out, because my trading approach is ICT SMC concept. That is my guiding tool. So I trade liquidity, imbalances, or inefficiencies. Yes, we can call them inefficiencies. What happened again yesterday? The market came again, respected this fair value gap and pushed back up, came back again, swept this liquidity, tapped into the fair value gap, daily fair value gap, and then again pushed back. So if you were buying gold yesterday, this was a good sniper entry, short move. How many pips? 28 to 53. That was close to around, it's a 200 pips. Yeah. Let's say if you had an entry, if you had an entry at 44.30, 44.31, 44.32, the market pushed up to 53. That was 200 pips. A quick sell here happened, but because of this daily fair value gap, gold came on at the 15-minute time frame, came and respected this zone. And see what happened. Gold pumped from 44.26 and went up to 44.68. So if you did an entry, let's say maybe at, let's say even at 44.30, and you held this through up to 44.68, that was a whooping 380 pips. 380 pips yesterday evening. Why? Because of this zone, a daily fair value gap. Very, very powerful zone. Very powerful zone that God has been respecting. So we can say this is a strong support zone. So what am I trading today? I want to see God come, take out this liquidity, come into this fair value gap, then execute some buys, short buys, if the momentum will respect this zone. Remember, a support zone or a resistance zone is not permanent. At a certain point, market breaks through. That is how it's that's how the market is. It will never come forever, tap here, go back, tap here. No. There's a momentum that will come and push through this daily fair value gap, up, down. Because remember, there is also liquidity sitting here. I like marking on 15-minute liquidity zones like this. Yes, there is liquidity there. Very, very serious liquidity. Okay, very serious liquidity lying down here. Let's mark it like this. Okay, let's mark it out like this. Okay, let's get it clear. Good. And then good. You see, there is sell side liquidity lying here. You see, Monday. Okay, let's put the alert here. You see, so this is the acting support so far. Okay, since Tuesday. Yeah, since Tuesday. This is the acting support so far. Market has respected this zone 3 times. 1, 2, 3. With a body candle close of bearish. Slight wiki pushing into this liquidity. Took out this liquidity. Came into this bullish order block. This one here. Tapped into it. Then engineered, pushed up to the higher levels. Those who trade structures, so what we can see on 15 minutes is gold has formed a double top. Pop. Okay, I see a double top. I see a double top structure here. You see. So what is gold going to do? Double top, or those who call it an M. They have formed an M, where now we have buy side liquidity lying here. Got it? Yes. Buy side liquidity lying here. Okay. Very powerful liquidity lying here. Guys, when you wake up, scan the market so that you avoid the noise of the day. I always hate looking for what to trade when the London opens. I always want to remain on the other side watching, waiting for the execution based on the setup and the analysis I've done this morning, 5 a.m. in the morning. 5 a.m., 5:30, 6 a.m. Very good times to analyze the market, especially when the Asian noise has also finished. So today is Thursday. I think you can see the market open here. The gap has been taken out. Look at this liquidity here. So gold, as we have seen on a daily, bearish. So we expect, you see this move, moved, break of structure, moved, break of structure, moved. So this trend is bearish. How far is this trend going to end? We don't know. So let me mark my zones. So liquidity zone 1, liquidity zone 1, a good. Liquidity zone 1, let me mark. Okay. And liquidity zone 2. This is also liquidity zone. Okay. Buy side liquidity passe. We also have another liquidity zone here. It's a fair value gap, bearish fair value gap. I'm going to mark it. I want to see how gold behaves. We also have another liquidity zone here. So these are historical futuristic points that the market has to take out. So that means if I'm to buy gold at the lower price down here, if this zone still respected, I am eyeing the market to come back. Let's have just let's say gold comes in here like this, forms some double bottoms, then comes in, do some break of structures, pop, take out this. I don't know when, but yes, within these 2 days, today and tomorrow, if it does not dump more down, I'm saying in case the market is now changing the trend to bullish. So what are we eyeing in the bullish trend? We are eyeing this liquidity, this one, this liquidity, the buy side higher price we have this week. But of course, gold has to come, collect orders, or even push to the psychological support level 4400. You see? Yes. So on the buy, I'm eyeing this imbalance. I'm eyeing this liquidity. Let me take out this on the buy side. So we have this point, we have this point. Let me even take out these ones so that my chart is more clear. Then allow me mark this. There is this fair value gap has been filled. There's a fair value gap here on 15-minute. Let's just mark this. Okay, so we have this fair value gap on 15-minute, which gold might come, tap into this, then return down because the daily bias is bearish. We are still respecting that. So we are not concluding that gold is going up to take out all this liquidity. I've just marked this because these are very, very 1, 2, 3, 4, 5. Yes. So if I am to enter gold down on buy, I can put my take profit 1 here, take profit 2 here, take profit 3 here, then wait to see what happens on this bearish order block that is lying here that influenced this move down. You see this bearish order block, another one up here. You see? Yeah. So liquidity lying on buy side is this. Liquidity lying on sell side. Yes, let's look at the sell side liquidity. On 15-minute, guys, is where you focus on looking at, of course, for the 4-hour, it shows you the highest liquidity zones. Then you come on 15 minutes to mark them. So this is also animating, and this is liquidity lying here on sell side. Liquidity is lying here on sell side. Let me mark this zone like this. Good. See? And then I put an alert here. Good. 44.24, there's liquidity. 43.97, there is liquidity. Then the market opening gap, this one here. The move that will push this market down here, it will be historical. You wait and see. I will come back on this analysis. Gold will dump to that gap. You will be shocked. It is still here taking orders and sweeping stop orders and stop losses. Busy stealing people's money. That is how gold is, my friend. But it's the best method to trade if you really like it. You know, But everybody has their choice. Personally, my choice is gold. I want to master it very well. Let's mark this. Let's mark this as FVG. 15 minutes. You see that? Yeah. So, uh, guys, thank you so much. I think we have come to the end of our Thursday market overview or outlook or analysis. Thank you. Keep watching, learn. In the description, there is a link for the broker I use. You can register, sign up, open your broker account, get the demo account as well. If you know how to trade or you're not new in trading, you can straight away deposit. They have a lot of options of transaction channel methods. Those in Kenya, you can use M-Pesa, TRC20 USDT, ERC card, banker cards, most or BTC. Most of the crypto networks are there, and also the mobile networks are there. So it's quite a user-friendly broker. I'm not marketing the broker. I'm just telling you, if you can come in and you want us to work to trade together, you can sign up with that broker and then we can be trading together. So thank you so much, guys. This is now our trading outlook. If I'm to buy gold, I might wait for a further drop down to this zone, see how it reacts to this support on daily fair value gap. Then if I see a confirmation, I execute buys. We go take out this liquidity engineered here, take out this liquidity here, push back to this zone. See, this is a double. These are equal highs. These are equal highs. Let me just mark this so that we can have a psychological resistance. Yes. Now this zone, the market has rejected it, or it has respected it. Let me use the word respected it. This zone, this price, 44.68. So this could be acting as the current resistance. You see this double top? It's double top? Yes, double top. The M structure. This is a very, very strong zone. Okay, formed these equal highs here. Let me put an alert here as well. The alerts help a lot. Maybe you are busy doing something. When the alert comes, it helps you to know where the market now is, so that you can be able to go to the charts and see whether your entries are neared. All right. So guys, thank you so very much. God bless you. Please like, subscribe, share, learn. If you have questions, feel free to ask. Starting this channel just to have information of market outlooks so that we can have sound decisions. I think I did a fundamental, but let me go back to this unemployment claims. Actual less than forecast is good for currency, yes. Then the jobless claims, initial claims, and all that. So we have news today. I think it's the only high impact news we have today at 4:30. The rest is just, quite not all that relevant. So we have the major news unemployment claims Thursday. Thursdays on unemployment claims, gold usually moves crazily. Then on Friday we have we have a crazy Friday, guys. We shall look at it tomorrow, but it's going to be crazy because the Canadian dollar is also having some unemployment rate. But look at US dollar: 1, 2, 3, 4, 5. Hey, yeah, 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 yeah. High impact news for gold tomorrow is having 5 news. Non-farm employment change, average hourly earnings, unemployment rate, Prorim UOM consumer sentiment, Prorim UOM inflation expectations. Rakataya brakadosh. So guys, tomorrow it's crazy, but before that, we go back to the news for today, which is this. So we'll be able to analyze tomorrow also, and we see what will happen. So thank you so much. God bless you. This is the final outlook of the market on a 15 minute, and the trend of gold is basically bearish as per the Asia session. As per the Asia session, this is what we call the Asia low, formed at 44.34 price. Okay, so the market might come, take out this liquidity, then come into this zone of daily fair value gap. Whatever happens here will show us the indication of gold moving either up or remaining here, consolidate, wait for some London open, sweep some liquidity, blah blah blah, consolidate. London might range because of the news coming up in the New York. The New York will either distribute or London might manipulate, because this is an accumulation. So let's see whether London will manipulate, then New York distributes.